Welcome back to Alpha Recap. I'm glad you could join us. We're looking back at the day's markets now that the close has happened. And as always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to unpack from today. It felt like a slow burn of rotation more than a single shock.
Yeah, exactly. So let's start with the big picture. The S&P finished the day down about 0.5%. The Nasdaq was down just under 0.33%, and small caps really lagged. The Russell was down nearly 2%.
Right, and that divergence is the headline here. Mega cap tech held things up, but beneath that, the market looked pretty fragile.
So what really stands out here is the gulf between headline indices and the broader market, right?
Absolutely. I mean, when you step back and look at this, the indices were masking a market that was sorting itself. Winners in certain cyclicals and policy-sensitive areas, and a pretty clear de-risking in small, thinly traded names.
Walk me through the three main drivers you saw today.
Sure. First, policy and regulatory headlines. Cannabis, crypto, and some utility permitting questions really moved pockets of the market. Second, there was sector rotation into materials and some cyclicals tied to industrial demand. Third, we saw profit-taking and risk-off positioning in smaller, rate-sensitive names as traders reduced exposure ahead of a potentially busy news stretch. That combination made for a narrow market where a few big names kept headline indices afloat while the rest of the market underperformed.
Let's dig into sectors. Materials and mining were a bright spot. What was driving that strength?
Investors are positioning for more industrial demand, reshoring, supply chain rehabs, infrastructure spending. So metals and miners picked up momentum on the idea of higher capital spending, not a broad commodity rally, but targeted strength where end demand looks firmer.
Right. And the other thing is energy. There was sort of a split there.
Exactly. Traditional oil names were supported by supply concerns and steady demand. But the real headlines were around renewables and hydrogen projects hitting development or financing milestones. That created some idiosyncratic winners rather than a unified sector move.
Real estate surprised people today too. What changed there?
Financing picked up for certain REITs and property companies. A few 8K filings clarified short-term liquidity, and that brought buyers into names that had been frozen out earlier. So rather than a wholesale rebound, this was selective. Companies with clearer paths to funding got support. Utilities were interesting. Where there was policy clarity or tariff visibility, those names were stable. Where permitting risk remained, they lagged.
Communications and media were mixed. Consumer was mixed. Basically a lot of nuance, right?
Yeah, that tracks. Large cap media names were range-bound after strategic updates, while smaller ad tech and niche media names were volatile. Consumer names showed category-specific winners and losers depending on margins and cash flow clarity.
Okay, let's highlight some of the big individual moves, because single stock events really shaped headlines today.
The standout was Jazz Pharmaceuticals. Shares jumped nearly 30% on company-specific news that basically reshaped the investment case. That kind of one-off can dominate flow and attention.
Honestly, I was a bit surprised by this one.
Right, and SanDisk put in a strong relative performance after a positive operational update that reinforced its competitive position in memory and storage. General Motors rose after reporting record truck sales, a reminder that some cyclicals still produce headline-grabbing results. Electronic Arts continued to show momentum on product cadence and forward commentary.
There were also a handful of 8Ks that created short-term moves, right?
Yes, Hilltop Holdings, CubeSmart, Carter's Inc., Amneal Pharmaceuticals, and others filed 8Ks that added clarity around liquidity or corporate actions. Traders react to those filings because they change the near-term risk profile of a stock.
Let's pivot to crypto and cannabis. Both came up a lot in headlines. What was the narrative there?
Crypto was this tug of war. Institutional adoption chatter helped some names, but regulatory pressure kept volatility high. Cannabis benefited from policy chatter suggesting faster state-level legalization and clearer business models in some places, which drove momentum in related consumer and retail names.
So policy momentum can create long tails, but timing is uncertain.
Exactly. Policy creates multi-year growth pathways, but the timing and regulatory structure are still unknown. That encourages speculative positioning in some names and tactical selective buying in the stronger operators.
All right, let's talk Fed and the economic backdrop. No rate moves today, but how did Fed risk shape action?
With inflation having moderated over the past year and the Fed staying data-dependent, markets are now keyed into forward guidance and speeches. Today's defensive tilt and small-cap selling suggested investors were willing to give the Fed the benefit of the doubt on higher-for-longer rhetoric until clearer, dovish signals emerge.
So a hotter-than-expected jobs report or inflation print would matter more than usual.
Yes, any hotter employment or inflation data could re-pressure rate-sensitive areas and widen dispersion.
Speaking of dispersion, breadth looked weak.
Market breadth was tepid because small cap selling pulled many indicators lower even as mega caps hovered near flat. That narrow leadership is a classic sign of later cycle behavior and usually precedes higher volatility unless the rotation broadens.
Can you explain that in plain terms for listeners who aren't traders?
Sure, think of the market like a team. If only a few players are scoring and the rest are off the court, the team looks okay on the scoreboard, but it's risky. When a few big companies carry the indices and most stocks lag, that's a sign the rally isn't broad. And broadness is healthier and more durable.
Got it. Quick, short reactions.
Right.
Yeah, absolutely.
So for investors, the playbook today was selective. For conservative portfolios, favor quality, cash-generative large caps, and sectors with regulatory visibility. For traders, look for dispersion and company-specific catalysts.
What about technicals? What should people be watching overnight?
Technically, investors will watch whether the S&P stays above recent moving average support zones and whether the Nasdaq can hold its near-term buyers around large-cap tech. If those lines break, risk-off flows into bonds and defensive sectors could accelerate.
And credit markets and volatility?
Keep an eye on volatility indicators and credit spreads. Widening credit spreads would confirm a deeper risk-off posture and make the small cap pressure more concerning.
So what's your short list of things to watch in the next session?
Number 1. Any Fed-related commentary or labor and inflation prints. Those will move the tape. Number 2. Earnings and filings. More 8Ks and company reports will add to dispersion. Number 3. Sector catalysts. Cannabis policy, crypto regulatory signals, utility project approvals, and real estate financing announcements. And number 4, technicals and volatility. Confirm whether small cap weakness broadens or remains isolated.
Final quick takeaways. Bullet points for listeners to walk away with.
1. The market closed with a narrow leadership. Headline indices were only modestly down, while small caps were clearly weaker. 2. Policy headlines and sector rotation, especially into materials, select energy and financed real estate, were the key drivers, not a single macro shock. 3. Expect elevated dispersion and episodic volatility. Earnings and Fed chatter will matter more than usual. And 4. Stay selective. Preserve core exposure to quality and look for company-specific catalysts in beaten-down names if you can tolerate the liquidity risk.
Okay, that's a helpful roadmap. Before we sign off, any last color or warnings?
Just one. Be mindful of liquidity in small names. Volatility gives opportunities, but it can also trap money if you trade too fast without enough market depth.
Good reminder. That wraps our recap of the session. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll be back after the next close.